Imagine a financial system that operates on a predictable rhythm, a 4-year cycle of boom and bust. This is the world of Bitcoin, a digital gold rush with its own unique heartbeat. The cycle unfolds in 4 distinct phases: accumulation, bull run, distribution, and bear market. Accumulation marks the period of quiet growth. Bitcoin, battered from the previous cycle's peak, trades at a low price. Savvy investors see this as an opportunity, quietly accumulating Bitcoin like digital gold nuggets. This phase is characterized by low volatility and modest steady gains. As confidence grows, the bull run begins. Demand for Bitcoin surges, pushing prices to new all-time highs. The media is abuzz with stories of overnight millionaires. This is the time of exuberance and speculation, as more and more people jump on the Bitcoin bandwagon, fearing they'll miss out. However, what goes up must come down. The distribution phase marks the peak of the cycle. Early adopters and long-term holders, sensing the market has become overheated, begin to take profits, selling their Bitcoin to new, less informed investors. This triggers a cascade of selling, leading to the final stage, the bear market. A key driver of Bitcoin's 4-year cycle is an event known as the halving. Every 210,000 blocks mined, roughly every 4 years, the reward that Bitcoin miners receive for securing the network is cut in half. This reduction in supply puts upward pressure on the price as Bitcoin becomes scarcer over time. The halving is a significant event in the Bitcoin world. It is hard-coded into the Bitcoin protocol, ensuring that the supply of Bitcoin remains finite and predictable. This predictable scarcity is one of the key factors that differentiates Bitcoin from traditional fiat currencies, which can be printed at will by central banks. Historically, the halving has been a catalyst for major bull runs in the Bitcoin market. The reduced supply, coupled with increasing demand, creates a supply-demand imbalance that pushes prices higher. This pattern has held true for the past 3 halving events, leading many to believe that the next halving, expected in 2024, will have a similar effect. However, it is important to note that past performance is not necessarily indicative of future results. While the halving has historically been a bullish event for Bitcoin, there are other factors that could impact the market in the coming years. As of February 2025, Bitcoin has just emerged from a bear market. The price has stabilized, and we are likely in the early stages of the accumulation phase. This is a time for cautious optimism, as the market recovers from the previous cycle's excesses. There are already signs of renewed institutional interest in Bitcoin, with major financial institutions adding Bitcoin to their balance sheets. This growing acceptance by mainstream finance could provide a tailwind for the next bull run. However, there are also headwinds to consider. Regulatory uncertainty continues to loom over the cryptocurrency industry. Governments around the world are grappling with how to regulate Bitcoin and other cryptocurrencies, and any major regulatory changes could impact the market. Bitcoin's 4-year cycle is a powerful force, but it is not the only factor that will determine the future of this nascent asset class. The interplay of technological innovation, regulatory developments, and macroeconomic trends will all play a role in shaping the Bitcoin market in the years to come. Rather than attempting to time the market or chase hype, it is essential to approach Bitcoin with a long-term perspective. Understand the cyclical nature of the market and be prepared for both the ups and the downs. The Bitcoin journey is still in its early stages. Stay informed, do your own research, and make informed decisions based on your own risk tolerance and financial goals. The future of money is being written, and Bitcoin is at the forefront of this revolution.